Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today we're going to be taking a look at the XRP chart, going over the dragon pattern that I've identified and have been talking about in my last couple of videos, as we're getting to a very crucial part of that pattern, and time is running out before we see the wave 4 termination moving into the 5th wave, which is going to be a great opportunity for traders. And I have been trading this. I pulled off a very nice swing trade over the last 3 days, making a very nice profit of 55.14%. Originally, when I put the trade on, the move started in the middle of the night, and where I live here in the Mountain Time Zone, it was really starting to pick up steam at about 2 o'clock in the morning, and I could barely keep my eyes open. So I basically just set my limit sell orders and went to sleep. But by the time I'd woke up in the morning, the price had come up to just almost where I had my limit sell order, so it didn't quite trigger it. Then the price fell back and consolidated for the last 2 days. But this morning, it finally closed me out of my trade. So it was a very nice profit, and this is one of many trades to come within this dragon pattern, because there are going to be a lot of tradable areas within this pattern that are going to be easily identifiable moving forward into the wave 4 termination, into the wave 5, and potentially to what could become XRP setting a new all-time high. And if you are looking for a place to trade crypto, I trade specifically on BitUnix. And even if you don't trade, if you do swap cryptos, there is a swapping feature which includes quite a few different cryptos. You definitely want to check this out because it's 0 fees. So if you're swapping cryptos and paying exorbitant fees, definitely consider going to BitUnix. Basically, all you have to do is just transfer your crypto into your spot account, swap them for whatever cryptos you're after, and then transfer them out of BitUnix right back to your wallet. This is primarily where I do all my swaps. And even if you don't trade at all, you can always take advantage of this. You can just use the QR code right there, or you can use the link in the description. So let's not waste any more time and let's get into the chart. So if you haven't seen my previous video, what we're looking at here is the XRP daily chart. What we have been forming is a dragon pattern with the head right here, the hump, the front feet coming down right here, the rear feet here, and we're now in the area forming the tail. This particular part of this pattern is the wave 4 of a much larger pattern. Now if we zoom in here, you can get a better idea of what we're looking at in total, as we have a wave 1 coming up here, a wave 2 coming down to the bottom here, the wave 3, which established the head, coming down to the wave 4 termination right here, which is where we are currently trading, followed by the 5th wave coming up, which has the opportunity to set a new all-time high. Now, going back to the descending wedge pattern here, you can see that we've actually started to form within this descending wedge in Elliott Wave what is known as an ABCDE, and we are currently trading on the D leg of that subwave. Now, dialing in on the 4-hour chart a little bit closer so that it's easier to see where we're at, you can see that D leg right here that I'm referring to. The C termination point ended right here, and we are currently trading in an ABC correction, having just started the C leg of that correction right here on this nice breakout that we've seen this morning. Now, even though the price punched out right here and has fallen back, it's very likely that what we're seeing right here is actually going to be an ABC moving up into the top of the C leg, which would mark the termination of the D subwave, starting the E wave, to which then the E wave could begin, which is likely going to be a 5-wave impulse move to the downside, which would complete our 4th wave here, commencing the beginning of the 5th wave. Now this pattern has been changing around quite a bit, but it's pretty obvious now looking at it that this is in fact what we're seeing. This is a post that I shared last night with my Patreon members, as it looked like before we had this breakout this morning, it looked like we were forming what's known as a bearish horizontal triangle, which would essentially be another ABCDE pattern trading within the larger ABCDE pattern that we are currently trading in here, represented by the orange line. It did look like we were going to trade within this horizontal triangle before coming down for this E wave here, but as of this morning, once we saw that move breaking up, it confirmed that what we're in fact seeing here is an ABC correction. So you can see within this pattern that we have an ABC here. These aren't going to be perfect. An ABC here. And we're now seeing an ABC here to the upside. The most likely place for this wave D to end is going to be right in this area around the number 1 Fibonacci, because generally, in regard to these ABC corrections, what you'll end up seeing is that the C leg will actually match the length of the A leg. So if we basically just take a simple measurement here to get an idea of how far this thing could go, we can basically get an idea just by doing a simple measurement like this, which is marked out by this number 1 fib that I have sitting right here. We also have the upper trend line, and we have a bearish order block right here on the hourly, as well as a bearish order block on the 12-hour chart, acting as resistance, which will likely mark the end of the wave C, completing the wave D, and beginning the wave E right here. Once this wave E is complete, moving down to the bottom of this descending triangle, that will complete the primary wave 4 right here and move us into the 5th wave of this 5-wave Elliott Wave impulse that we have been seeing. Now, not very many people are catching on to this quite yet. As far as I've seen, I'm the only person that's even talking about this dragon pattern that's forming between the wave 3 and the wave 4. But it's pretty obvious that that's what we're looking at. And why most of the market is generally bearish right now, there's a good chance that most of retail will do what they normally do and will miss out on this big 5th wave move to the upside. As price was falling down here, most of retail was still bullish. Once we got down in this area and started to bottom, suddenly retail became bearish. Now we've started to make this move to the upside again, and about the time this wave C is completed, finishing off this larger wave D, this is about the point where retail will likely get super bullish, just in time to watch the price drop down to finish off this E leg of the descending triangle. And about the time they're all getting scared and selling all their positions, that's when we'll see this move up right here to the wave 5, which has the potential to set a new all-time high. It really just depends on how much volume comes into this, how much momentum there is. There's a lot of things that could happen, as I've been talking about. We could see this wave 5 become truncated, falling short of setting a new all-time high. We could see it just sweep the previous all-time high before going into a correction. There's also the chance that if we do get the right amount of volume, we do get the right amount of momentum, that we could in fact come up here to the 618 around that $4 level, perhaps even higher, as the 786 terminates right around that $4.50 range. But nobody can say for sure exactly how this is going to play out in its finality. But one thing that we do know for sure is that if you're planning on trading this, it's pretty easy to see where you would want to place your trades. I'm certainly not recommending that anybody trade this. I will be, but we know this leg C is about halfway there. We know that's going to be followed by an E leg coming down here, which will likely sweep the previous C leg termination point here. Since we're looking at a descending triangle, the C leg swept the A, and the E will likely sweep the C as well, completing the wave 4 termination and moving into the wave 5. Another thing that you need to consider is the fact that this white line right here is actually the wave 1 termination point coming off of this candle here. And by Elliott Wave rules, the wave 4 termination cannot enter into the wave 1 termination area. There is a little bit of flexibility in my mind on this rule in regard to crypto, because it's such an incredibly over-leveraged market that even if that wick did kind of come down in this territory, and that's all it was a wick, I would let it slide, as long as the candle bodies that we can see here don't come into contact with other candle bodies. And generally, I only let those slide if it's a liquidation candle. So if we get one of these big candles coming down, trying to sop up liquidity, and it happens to come down and cross into this area, I would let that slide. But if it was gradual price action moving down into this area, then I wouldn't. But crypto does not work the same way that stocks and commodities do. Crypto basically operates in a supercharged form of over-leveraging, and the market makers are well aware of this. So at this point, that's what I'll be looking for. I'll be looking for this final C leg right here of this ABC subwave to finish off this ABC correction to the upside, finishing in this area here. Then I'll be looking for a 5-wave move to the downside, down to this area here, to finish off the E leg of the descending triangle, as well as completing the wave 4 of the primary 5-wave move. At that point, we should be moving in to the 5th wave of this Elliott Wave 5-wave impulse, or the tail of the dragon pattern. Just depends on how you look at it, which is very likely to also be a 5-wave impulse to the upside. And then keep in mind, once this is complete, there's also going to be opportunity to the downside, because once this wave 5 is complete, there's a very good chance that we're going to see a very big correction afterwards. Every last bit of this is tradable if you're a trader, but one thing's for sure, always keep risk management at the very top of your list, along with capital preservation. Make sure to ladder in and ladder out of your positions to decrease your risk, and always make sure that you use a stop loss, because these markets are likely to become unpredictable around these key points. And if any point in time this pattern does fail, you don't want to have all your eggs in one basket, because there is always a chance that we could have some kind of a black swan event, and before you know it, this pattern just falls off freaking cliff. So make sure that you're always protecting your capital using risk management strategies, because we live in uncertain times. And as beautiful as this pattern is, as perfect as it is laid out, as incredible of an opportunity as it appears to be, every single pattern on Earth has a failure rate. And depending on what happens, it certainly could fail at some point. So you always want to keep that in mind. Protect your capital. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. So thank you so much. Have a great Sunday, and I'll talk to you soon.